Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. Here you can see that on the gold market reaction on recent Fed statements, CPI numbers was a bit weaker than on other markets, especially on the stock market if we'll take a look at the Forex market. And the gold market still keep showing some contradictive reaction performance compared to the euro currency. For example, on a gold market we have weekly bearish double repo pattern, while on the euro currency this week we could get bullish grabber also on the weekly chart. So it seems that the gold market has lost a bit ground in recent couple of weeks when the demand from the central banks for the gold reserves have diminished slightly. And it means that currently we could see the degree of the importance of this driving factor for a gold market. So if market can't reestablish upward action based on other factors, such as a recent statement from the Fed, dynamic of the 10-year bonds in the United States, where yields also are dropping, which is actually a supportive factor for the gold, it means that indeed the demand from the central banks was probably the major factor in recent few weeks or even months. And when this pattern stops working, it's gold market's a bit lost, so it's a bit frustrating, losing ground, as I said, and investors just have no decision on activities or what actually they should do in the current circumstances. From that standpoint, we could understand that and see this recent contradictory performance in relation to other assets. Maybe by this reason we could even see some opposite performance on the different markets, so on the gold and on the euro currency. This is theoretically possible because, as you understand, euro and gold it's still different assets. They both trade to the dollar index, to the dollar, but they are still different assets. And investors' expectation on the gold and the euro might be different, so we will see. But currently, if we take a look at the gold market on a daily chart, I do not see something really important. Market has shown this upward bounce. It is very small, gradual, which is actually it doesn't contradict to the bearish context. Trend remained bearish, and this probably was reaction on the oversold area. And I would say that together with the double repo pattern that we have on the weekly chart, market keeps bearish context. Besides, if by the end of this week, today and tomorrow, we will see start downward action, so a continuation somewhere to the maybe 2285 area, 2290. On the weekly chart, you will not see all this stuff. This will be just another black candle on the weekly chart, which will be supportive and bring the good shape to the double repo pattern. On the 4 time frame chart, it's also not too many things to comment. We're still watching for this ABCD pattern. Upward pullback has happened. Here's most interesting stuff with the reaction on the gold market to the Fed statement. Let's take a look what has happened. As we suggested, indeed, here was the breakout, even in excess of the target that we talked. If you remember, we talked about this pennant and said, take a look, here's maybe butterfly market, probably is preparing for upward continuation, some upward breakout, because pennant usually continuation pattern. So although we have the ABCD here in mind, the target is just around this area, 23.25, if you remember. This was target of the ABCD. Due to the Fed catalysis, you can see what has happened. The market has jumped slightly higher. But it's more interesting, the following reaction. And you can see just within a few hours, the overall upward bounce have been erased to the downside. This, if you combine these candles, you could see here some kind of the bearish engulfing pattern. So fast upward action and sharp downside reversal. Some kind of the rejection of price, as we call it in the terms of the Judnaple, although it is not quite so based on the market mechanics and where this pattern has been formed. But by the shape engulfing some kind of the fast return right back down. So it means that in tomorrow action we could focus on tactical reasons, since we have a kind of engulfing in 90% of cases take the shape of kind of the A, B, C, top, D pattern. This could be considered as a target of this pattern. And take a look, minor hand shoulders is here, so theoretically it might be formed very soon. This minor pullback somewhere to the 23, 22 area where the top of the right arm might be formed. And then you could just keep an eye on some kind of the ABCD if you would like to trade this particular pattern. And then we will see what will happen probably on the next week. Because we need to understand how euro currency and gold market will perform together, in particular what will happen with the major patterns that we have. Most interesting is what will happen with the daily over the weekly double repo sale pattern, but it's remain valid by the end of this week. But this is already the target for the next week. So today and tomorrow probably I think that it will be possible to focus just on this particular pattern.